and this is Josh Jelinski, the financial quarterback. Don't touch that dial. Marty Bent is a well-known figure in the Bitcoin space, primarily recognized for his role as an advocate for Bitcoin's underlying principles. Welcome to the show, Marty.
Josh, thank you for having me. Happy Friday.
Happy Friday. I'm Josh Jelinski, the financial quarterback. If you're just joining us, you can find us on Apple, Spotify, and X. First off, what is the 1031 hat? Is it like a Bible verse?
No, it's the venture fund that I'm a managing partner at. We're the biggest, the largest venture fund dedicated to investing in Bitcoin companies building out infrastructure that will onboard the masses to Bitcoin. And so 1031 is an homage to October 31st, which is the date in which Satoshi released the Bitcoin white paper to the world back in 2008. So we try to align everything we do at 1031 with the ethos of Bitcoin, and that plays through with the name of the fund as well.
What are some of the coolest projects that you're seeing in the Bitcoin space?
There's so many of them. Within the portfolio right now, Strike we're the largest shareholder in Strike, and I think that is one of the most exciting companies in the portfolio. They have more licenses than Coinbase globally, so they're spread out globally. Companies like Unchained down the hall that are leveraging Bitcoin's native multi-sig properties to create a base to build financial products off of. They have a lending desk, an IRA product as well, and moving forward, what we really focus on is timing of investments. And part of our thesis is that there's an order of operations to Bitcoin's long-term success, and companies will be serving particular needs at particular parts of the adoption phase of Bitcoin as the masses get onboarded onto it. And so moving forward, I think one of the most interesting developments in the space on the company formation and service side is the Bitcoinization of traditional finance. And so I think this cycle, as Bitcoin has established itself as $1 trillion asset, we'll begin to see Bitcoin being used as collateral in traditional structured credit products. And so we have another company in the portfolio, Battery Finance, that is imbuing traditional credit refinancing products with Bitcoin dual collateralized. So you'll dual collateralize something like a commercial real estate asset with the physical property, and then alongside that Bitcoin. And I think that is something moving forward that is going to get a lot of traction this cycle, particularly as Bitcoin is super collateral.
And you're a podcaster with Tales from the Crypt. When did you start it? And what was your best memory doing the show so far?
Oh, gosh. So formerly Tales from the Crypt. Now we're Truth for the Commoner. We got so big that the fear of getting a cease and desist from HBO was entered into my life. And so we had to rebrand to Truth for the Commoner.
Did they give you a cease and desist?
No, but I think we were trying to be proactive and thinking adversarially, and did not want to suffer that headache. So we made the rebrand to Truth for the Commoner about 2 years ago. And I think it aligns more with the message we're trying to get out there via the platform. And it's been around for 7 years now. So I started in June of 2017 as a newsletter that I wrote predominantly for friends and family to learn more about Bitcoin. It was during the beginnings of that bull market, and I've been in Bitcoin since 2013. And my friends and family knew me as the Bitcoin guy. They were annoying me with texts and emails and calls, and I said, I'll write this newsletter to teach you about Bitcoin, so I don't have to answer each of you individually. That took on a life of its own, became pretty popular over the summer of 2017, caught the eye of an individual at Barstool Sports in New York. We met up. I was living in New York at the time. We met up in Flatiron. I was asking him about the newsletter. What do you think? He said, it's cool and all. You should start a podcast. And that was probably the coolest part, is meeting somebody from Barstool Sports and having him help me start the podcast. That's where we originally recorded the show, was in Barstool Sports Studios late at night on the weekends, I would sneak into the studios and record with Bitcoin developers, fund managers, and people building in the space. And I think that was a really cool part of it. I mean, overall, the coolest part is just being able to develop relationships and a network of really talented and unique individuals in the space building out Bitcoin. And that's it's cliche, but the coolest part has been the friends that have been made along the way.
So how'd you get into Bitcoin? What's your Bitcoin genesis story?
I was a child of the great financial crisis. So I was 18 or 17, actually, in the fall of 2008, senior in high school, and happened to be taking an elective economics course at the time. Went to an all guys prep school, and a very prescient time to be taking an elective economics class. The teacher was very on top of things and basically said, "Gentlemen, things are pretty messed up, as you can tell." During that fall, we went through the TARP bill and the bailouts and all that. And so at that point, I got really interested in economics and monetary policy, and went to college at DePaul University in Chicago with the know your enemy mentality. Like, how did everything that happened in 2008 come to be? And so while I was studying economics in college, I actually worked at a managed futures fund in the city as well. We indexed commodity trading advisors, and they traded currency markets and fixed income, commodities, gold, wheat, all of that. So I've got a crash course, baptism by fire, on commodities markets and currency markets. And part of my job there was to write commentaries on FX markets and why markets were moving the way they did based off of central bank announcements. And so I started that job in 2012, and at the same time, still in college, learning about economics, monetary policy. And this was around the time of Operation Twist in QE2, when Janet Yellen was taking over the helm from Bernanke. And the monetary policy of the Fed and BOJ and PBOC and ECB really didn't make sense to me. I would ask the chief investment officers of the funds that we index what they thought about monetary policy, and they sort of hand wave it away, like it doesn't really have an effect on what we do. And I found that hard to believe. And around the same time I was working at the fund, I discovered Bitcoin, and the juxtaposition of Bitcoin's perfect monetary policy that was very transparent and predictable made a lot more sense to me compared to the monetary policy of the central banks that I was following and writing commentaries on. And so almost instantly, I think a combination of having that intuition that things were systemically broken, seeing how things were running at the central banks as I was working at the fund, and then I was sort of open and receptive to an alternative to that system. When I found Bitcoin in the early 2013, I think right away I was like, oh, this seems like a much better system compared to the one that I'm writing commentaries on and following on a day-to-day basis. And so I picked up Bitcoin almost intuitively. And this was around the same time that you had the Snowden leaks, WikiLeaks, Aaron Schwartz was a little bit later, but I think I was a young, impressionable individual. I was a child of the great financial crisis. I was very, very receptive to an alternative to the system that created those problems. And so when I saw Bitcoin, I was like, oh, this is it. And that's how I found it.
Did you smash buy-in? Did you dollar cost averaging? What did you put a little bit?
I was only 21 at the time, so I was not the most well off. Still a relatively poor college student. I did start DCAing and set up a Coinbase account, I believe, and buying $50 here, $50 there when I had enough money that I wasn't spending on beer at the bars in Chicago. I would funnel that into Bitcoin.
Yeah, those beers were very costly.
Yes, they were. The opportunity cost of degenerate debauchery in college proved to be rather expensive.
That's a huge, I mean, I'm going to write a book on that. That's a massive opportunity cost. I know many people became millionaires just because they didn't screw around in their 20s.
Yeah.
So you quit your job and decided to learn all about Bitcoin. Describe that. Why did you quit everything for Bitcoin? Why didn't you do it as a part-time gig?
Originally, I didn't quit all of it for Bitcoin. I left finance. I left the fund because I was on a portfolio management team. I was an analyst. It's a portfolio management team of 3, or CIO. portfolio manager, and then myself. And I didn't like the life of an Excel jockey pulling data from Bloomberg and creating nice charts and doing all that. That wasn't a life for me. It was the same time that social media was really taking off and tech was taking off. And so honestly, I left the job to learn more about tech, just more broadly, how apps are created. What does it look like to build a back end and connect it with the front end? How does all of that work? And so I left finance to learn more about tech and worked in the tech sector doing software sales jobs for about 3 years, all the while staying maniacally obsessed with Bitcoin and learning more about it, writing more about it. And then it wasn't until like 2017 where I really decided to focus on Bitcoin. That was the product of quitting a job and thinking I was going to be able to get one rather quickly and having a stint of unemployment for the better part of a year. And so getting into Bitcoin professionally sort of was forced by the fact that I couldn't find a job. So I started writing about it, started talking about it. And luckily, throughout that period where I was unemployed, I wasn't too debaucherous in college. I did save up enough money in Bitcoin, where at that point it did help me sustain my lifestyle and develop the time and build the time to focus on how I was going to get into Bitcoin professionally.
Were you like an anarcho-capitalist Bitcoiner when you started out? Libertarian? Are you still that way? Or there tends to be these kids who grew up with this anarcho-capitalist bent. You don't hear it as much, but
Yeah, I guess at some point I probably consider myself staunchly libertarian and somewhat anarcho-capitalist. I think I was certainly and still am to a degree anti-establishment. I do think that we live in a day and age and are living through an inflection point where we do need to drastically change the way a lot of the incumbent systems that we grew up in for the better. And they need to catch up with the times from a tech perspective, from a social perspective. Yeah, I mean, I was definitely, I learned, excuse me, I studied economics in college and was forced to learn about the neoliberal Keynesian view of how economies should operate. But I did take the time to research other economic philosophies, mainly Austrian economics. So I was definitely free market Austrian leaning when it comes to political beliefs. Anarcho-capitalist, maybe a short stint, but definitely free market first. And I mean, honestly, still trying to figure out where I situate myself politically. But yeah, I think the anarcho-capitalist, libertarian sort of mindset that Bitcoin came out of, it's a very important framework to understand, and Bitcoin inarguably would not exist without the anarcho-capitalist just pushing it into the world, sending it live. And so I think it's just trying to balance the inherent anarcho-capitalist nature of Bitcoin, the network, and trying to fit it into the political sort of framework that exists today.
what about people who think it's too late to get into Bitcoin? Also, Bitcoin price predictions. Look, Bitcoin, let's get to fun stuff. What's your Bitcoin price prediction?
How many months?
12 months.
Way higher than it is today. A hard prediction, like I could see a range from anywhere from $250,000 to $1 million. And that's dependent on what actually happens between now and 12 months from now. And I've been talking about this on my show a lot, and it's a bit tongue in cheek. The concept of a super cycle has been thrown around quite a bit in Bitcoin's history. And when somebody said super cycle in years past, they're like, this is it. It's going up and you're not going to be able to get back in lower. We're going up forever. I'm not going to say super cycle for sure, but I will say that if the nation state actors that are positioning, particularly the US, to get into Bitcoin and use it as a strategic reserve, if that comes to fruition and actually happens, I think that is a very big change for Bitcoin, the asset, in terms of the type of holder and demand profile that enters the market. I mean, Senator Lummis's Bitcoin Strategic Reserve Act explicitly says we want to accumulate Bitcoin and hold it for 20 years. So you have a large nation state actor that explicitly wants to acquire almost 5% of the total Bitcoin supply and keep it off the market for an extended period of time, multiple decades. And Bitcoiners have been talking about this for as long as the protocol has been live, which is the fact that everybody will have to bend the knee to Bitcoin at some point, and play the game. And the prospect of nation states ultimately getting into Bitcoin has always been in the minds of Bitcoiners. And the idea has been is that when that happens, you have this mad dash to accumulate Bitcoin on the nation state level. And that's when things get really interesting, because you have actors with endless pockets and endless ability to print money to acquire Bitcoin and hold it for long periods of time. So if that nation state buyer is actually entering the market in size this time around, I think that is going to have profound effects on the price of Bitcoin, and it'll be much higher than it is today. And then you factor in the people that already hold Bitcoin, that have been around for extended periods of time and understand the asset that they hold. I think you can see this in the on-chain data hodl waves, which were produced by Drew Bonsall from Unchained. You can go look at the data. The people that have been holding Bitcoin for long periods of time are holding on to it. They're more confident. They have better information. They better understand what Bitcoin is and why they're holding it. And so we could be entering a period where it is the scarcity of Bitcoin really becomes apparent to the world outside of the bubble of Bitcoiners, who this scarcity has been apparent to for some time now. And so if the United States passes a Strategic Reserve Act, that sends a signal to the market of other nation states, like we should be acquiring a Bitcoin strategic reserve as well. I think the price could move in ways in which we haven't seen historically. And that could be a rapid repricing upwards to seven figures at some point in the next couple of years. That is my thought. As a bit contrarian in the space. People think we're going to have similar 4-year cycles. We'll do a 5 or 6x from here to anywhere from 250 to 700K, and we'll fall by 80%. I am not sure one way or the other. I can see both paths, but I do think people have to consider that we could be entering a period of Bitcoin's history where things change, and things do not act like they have historically for the first 16 years, because you just have a different type of buyer entering the market that can not only buy in size, but has the intent to hold for long periods of time.
Who do you think the next nation state will be?
My money would be on somebody in the Middle East. I think a combination of the weaponization of the U.S. Treasury market in over the last few years, and the push towards a more multipolar geopolitical landscape, and the fact that the Middle East oil and gas producers want to be in a position of neutrality, and not tie their wagon to one horse. The U.S. government being that horse, and has been that horse for many decades. I think that dynamic is changing, and I think just due to the amount of wealth that exists in the Middle East and their understanding of commodities markets, particularly energy markets, would put them in the lead, in my mind, somebody from the Middle East, an oil producing country in the Middle East, to be the next nation state to fall. And there may be, many of them may already have Bitcoin. They just don't want to announce it publicly because they don't want everybody else to run to the market to acquire more. That is a theory that's definitely going on and being spread behind the scenes, is that there are larger nation states with sizable Bitcoin balances that just simply aren't going to announce because they don't want others to rush into the market. And we do have an example of this having already happened with Bhutan. I mean, Bhutan now holds over 13,000 Bitcoins, a very small nation in the Himalayas. And there's a good argument to be made that we wouldn't know that Bhutan has that many Bitcoin today if they didn't get caught up in the bankruptcy proceedings of BlockFi and Celsius. That's the only reason why we know that Bhutan has Bitcoin in the first place. They were essentially forced to admit it because their sovereign wealth fund was publicly showed up in the documents and the bankruptcy proceedings of those two companies. So they're essentially forced to say, yeah, we've been accumulating Bitcoin. So I would not be shocked at all. In fact, I would bet that there are many nation states that are accumulating Bitcoin behind the scenes and simply just haven't announced it yet.
What about people say it's too late? I wanted to buy at 15,000. I wanted to buy at 6,000, and I just missed the boat.
I would say it's not too late. It's never too late. It will never be too late for Bitcoin, even when it's fully monetized. But I mean, I think to put where we are today into perspective, we're at about a $1.77, $1.8 trillion market caps. There's a pretty easy case to be made that Bitcoin is better than gold, is a better form of gold than gold. The metal is itself. And so if you're just using Bitcoin as this form of digital gold and thinking that'll price up to the level of gold and trade at parity at some point in the future, which I think is a pretty easy case to be made when it comes to Bitcoin. It's more scarce, it's more divisible, it's more easily transferable, it's more easily verifiable. You can verify that you have actual Bitcoin trivially and very cheaply, and you can send it around the world instantly to anybody. It's gold with much better properties, digital properties. And so I think the case can easily be made that Bitcoin will eventually reach parity with gold. And if that's the case, then we have at least another 8 to 10x to go from here before we get there. And so if you think that there is a case to be made that Bitcoin should reach parity with gold, we're certainly not too late. We're very early on that path. And I don't think it stops at gold. I think people have been using other assets, whether it's treasury bonds, which we know, particularly here in the United States, can be printed at will. Whenever people have been using those as a store of value or cash equivalent assets, housing, real estate has been is the largest store of value asset in the world, and real estate is arguably a consumable good. People shouldn't be using real estate to store wealth. They should be using it to live and do what they need to do to shelter themselves. And so when you factor in other assets that are being used as store of value assets that arguably shouldn't be and are simply being used as store of value assets because the individuals in the market has been forced to flood liquidity into these assets to keep up with inflation, that's when you get beyond Bitcoin gold parity and you begin to think, what else can Bitcoin compete with? And I think compete with treasury bonds, real estate assets. And when you look at the market for those assets and how, let's just say Bitcoin demonetizes treasuries and real estate by 50%, that's another, I believe, another $150 trillion that could flow into the Bitcoin market. And so I think at its end goal, Bitcoin does demonetize a lot of these assets. And I've been saying this for years very confidently and based off of a calculation that Hal Finney ran back in, I believe, 2010 or 2011. But if you begin to play out the scenarios in which people realize that Bitcoin is a superior store of value asset and monetary good compared to all these other assets, it's very easy to see how Bitcoin could become an asset where one Bitcoin's worth $10 million in today's terms. And so I don't think it's too late at all. It's funny, when I got it in 2013 and the price of Bitcoin was between, I mean, it was 600, low hundreds, and then it flew up to 1,200 at the end of that year. Like, I thought it was late at the end of 2013, beginning of 2014, when it went to $1,200. And as time goes on, you learn that you're not late. And then even if you get Bitcoin on the back end of its monetization, it's still not too late. It's still a better store of value asset, monetary good. So you're going to want to adopt the better money at any point in its monetization phase, because it's simply better money. The alternatives are not going to store your wealth or enable you to facilitate economic activity as efficiently as other currencies or store of value assets.
We're going to questions. We have Pringle. Go ahead, Pringle.
Hi, Josh.
Hi.
It's the first time I'm hearing your voice, I think.
I know. That's why I've never seen you in spaces, and I wanted to just say g'day and send my love to you and Matt and just tell you that not only have you orange pilled us over the years, it's been nearly 5 years, but my kids' partners are all orange pilled, and it's come from people like you. And it's just doing the work, staying vigilant, and talking about it every night on the dinner table where it drives them bonkers. But I just wanted to thank you because, oh, you know how much I love you, Marty. Your show has been pivotal in our journey. It really has.
Well, the love is mutual. Your support over the years has been greatly appreciated, and it makes it easy to come back and talk about this day in and day out.
Well, you do it. You do it in a way that's so succinct and it doesn't overload you with the technicalities. It just gives you a real deep understanding philosophically. And then, of course, you do the math. And that's when it clicks.
Yeah, that's the other thing. I mean, we haven't really touched on this too, but when it comes to like long-term adopt, like I've got a almost 5-year-old and a 2-year-old, and if they grow up in a world in which like Bitcoin is just the water they're swimming in, I think people are severely discounting that as well. Like my oldest son, we have him watching the Tuttle Twins and they have Bitcoin episodes, and he already knows what Bitcoin is. You ask him what Bitcoin is, he's like, Bitcoin is hard money. It's better money. I think people very much underappreciate the power of Gen Z, and the generations behind them growing up in a world in which Bitcoin exists. I think they're independently going to come to the conclusion that Bitcoin is better money, despite what any millennial, Gen Xer, or Boomer may think about Bitcoin.
I think he orange pilled more people than people would ever give him credit for.
He was calling me on the phone in 2017, screaming in my ear. I think we did a podcast in February 2018 or 2019, and that's one of the most popular podcasts that we've ever recorded, because he does have a passion for Bitcoin, and comes from a world in which he's seen these tech adoption waves come and go, and I think he was one. I hope he's back on the horse. I know he got a little crazy there with the FTX stuff, but
he still kept his Bitcoin. It just he drastically reduced his position because he was illiquid or something.
That's why we say stay humble, stack sats. Don't get crazy with leverage. Don't get over your skis. Don't buy more Bitcoin than you can afford to hold at any given point in time without having to sell some to live. It is important. You have to temper the FOMO and the realization that Bitcoin is monetizing with reality of your situation. Like, you have bills to pay, you have a family to take care of. You gotta do it appropriately.
If you want to stack sats, have an emergency fund in USD. Like that's what your bills are in. You want to be able to hodl for generations. You have to orient your financial plan in a way that you can actually hodl and that you don't vomit out your Bitcoin if something happens. The FTX thing was big. That was huge. That shook a lot of people's confidence. How do you get people? It's kind of elementary probably for you, but you get people who equate Bitcoin with scams and coinery, or what happened with the FTX.
It's an uphill battle. That is the unfortunate reality that we have to deal with, is that people hear Bitcoin and they assume crypto, or vice versa. They hear crypto and they assume Bitcoin. And I do think
explain the difference for people.
In common language is Bitcoin, and there's everything else. Everything else is an affinity scam trying to make you believe that Bitcoin is the MySpace of this cryptocurrency, quote unquote, revolution, as they will call it, and that there are better forms of Bitcoin that are faster.
You mean easier. To tell me the XRP with the G8 summit, whatever crap they say,
the banks are using it. Did you hear the banks are using it? It's hard. It's an uphill battle. And I think it is. I mean, that's something we've done on the show. Another reason why we rebranded from Tales from the Crypt, because I didn't want any association with broader crypto. But it is insane. Like, we see it at 1031. On the venture side, if you look at the amount of money that has been raised for funds like ours, which are narrowly focused on Bitcoin, not only the protocol, but the industry being built around it, and the companies that are Bitcoin only, the amount of venture dollars from LPs that has flowed towards strategies like ours it pales in comparison to the amount of money that's been raised for broader crypto, literally 100 to 1, tens of billions of dollars for broader crypto venture strategies. And I believe at this point still right around or maybe even a little below $1 billion for Bitcoin focused strategies. And that is just due to a mass misconception that exists in the world where people think that Bitcoin is the MySpace of quote unquote cryptocurrency revolution, and that there are going to be usurpers that come out of the world of crypto, but it's simply not the case. Again, going back to the market cap, I mean, the next 10 cryptos, if you added their market cap up, it doesn't even equate to half of Bitcoin's market cap. And despite this, people get bamboozled by broader crypto because they think they're late and they want to make up and attach their wagon to the token or coin that is going to provide Bitcoin-like returns for them. They're sort of trying to enter a time machine and make back the returns that they believe they missed out on. Like I said earlier, I think we have a lot of upside to go from here with Bitcoin alone. But when I think, to get to your question, I think you have to be, how I handle it is just being very adamant about always and consistently separating Bitcoin from crypto. And we do this all the time at 1031, talking to prospective LPs, being upfront, like everything we say in this meeting and everything we're talking about is specific to Bitcoin, not crypto. We think crypto is noise and Bitcoin is the signal, and it's just repeating that message. And I actually do think the industry has done a good job, particularly post FTX, of really driving that demarcation between Bitcoin and crypto. I do think more and more people who are even on the outside of what's going on here do, or not, maybe they don't fully already, all of them, but many people do understand that there's something different between Bitcoin and crypto. And I think that's really, you can see it in the ETF flows, the ETFs for Bitcoin and the ETFs for Ethereum. I mean, the Bitcoin ETFs are the most popular ETFs that have ever existed. And Ethereum ETFs, I believe, have had net outflows since they launched. And I think that's some signal there, particularly on the institutional capital side, like the quote unquote smart money, I think understands this separation between Bitcoin and crypto and is putting their money on the table accordingly. But yeah, it's an uphill battle, and it is a shame that many people see what happened at FTX, see what happened at BlockFi, Celsius, and they think that is a Bitcoin problem, when really, in all those cases, it was an individual risk management problem on behalf of the executives of those businesses. Risk management, and I mean, FTX was overt fraud. So it's, yeah, you have to separate those. Unfortunately, when you have something as profound as Bitcoin, is going to come with individuals and companies that are for the cause, and then opportunists who are simply looking to squeeze the greater fool and accumulate more Bitcoin for themselves.
We have a question from Marta. Says this: I follow Marty. Marta follows Marty. Hoping you guys might explain to people who are not familiar with Bitcoin how you are not in danger of losing your investment if the internet goes down. Unsure how this became an issue for people. And also, are you aware of a large mining facility located in an old abandoned town in British Columbia, which can only be reached by boat? Cool story.
That sounds cool. I don't know about that mining facility. I mean, the internet thing, I mean, it's people fear, it's like the one of the tried and true tropes of the zero hedge commenter or your YouTube commenter. It's like, oh, I'm not investing in Bitcoin. They can just shut the internet down and Bitcoin's screwed. And I mean, the argument on its face, I would argue, is just idiotic, because you're taking it to an extreme on the spectrum. Like, oh, they're just going to pull the plug on the internet and Bitcoin's screwed. It's like, yeah, you certainly have a case to be, it would certainly interrupt the network, but it's going to interrupt everything else. Like if they unplug the internet, your bank's screwed, your car's screwed, everything's internet connected these days. We wouldn't be able to be having this conversation right now. So if they unplug the internet, we got bigger problems than Bitcoin.
I was at one of these conferences and this guy had this Bitcoin computer that's offline from the internet, and he was actually seeking to solve that issue. I you probably know the guy, but it was a cool thing. I was going to buy one. It's like,
Yeah, I mean, well, there are alternative transaction relay networks. I mean, NVK from Cold Card, Adam Curry, and I believe his name is Sam Patterson and Elaine Al in 2017, 2016, maybe even, they sent Bitcoin over ham radio waves. Like there are, I mean, if we want to think extremely adversarially, like if the internet went down, how would the Bitcoin network operate? I mean, there are these alternative communication layers that Bitcoiners have utilized before, whether it's ham radio waves or mesh networks or satellites, the Blockstream satellite. There are ways to do it. I don't think it would be very efficient, and I don't think everybody will be able to utilize them because they're not all technically competent. But I mean, yeah, there are sort of fallback options for transaction relay, specifically if the internet were to go down. But again, like I think it's just it's an absurd assertion, and it's a weak argument that really doesn't factor in. Like if you turn the whole internet off, which I don't even think it's possible to do that globally without extreme coordination between geopolitical actors that hate each other. But if you turn the internet off, we have much bigger problems. I'm more worried about whether or not I can get clean water and protect my family from vagrants than being able to send a Bitcoin transaction.
explain Bitcoin to somebody who has no clue what it is. Other than digital gold, how would you describe it?
Better money, money that can't be controlled by governments or central banks. It's like how much detail are we giving this person? Do they want to understand how it works? They want to
they want to understand how it works. They don't know anything. They're listening in. They're tuning into my podcast. They came from the retirement planning. There's some boomer. They don't know. They don't know anything. They just want to buy in. They're Bitcoin's 90K, 100K soon. Whatever price it is. And they're just like, hey, I don't even know what I'm getting into.
So you're buying into a scarce asset. There's only ever going to be 21 million Bitcoin. So if you can get a slice of that 21 million pie, you're doing pretty good. The bigger the slice that you can get, the better that you're going to do. And that you have certainty that there are only ever going to be 21 million Bitcoin because the network is controlled not by a central authority that can just go in and change the rules at any given point in time that they feel compelled to do so. You're opting in and buying a scarce asset that runs on a network controlled by tens, hundreds of thousands, eventually millions of people globally who will never agree to change the supply of 21 million. And so what you're buying into is the certainty of Bitcoin's monetary properties, the fact that it's scarce, and you have certainty that it's scarce because the only way to change it is to get hundreds of thousands, if not millions of people around the world globally to agree to change that policy. And they're in the network and using Bitcoin in the first place because it has that policy. So to think that you're going to be able to convince a central planner or a company to change the fact that there will only ever be 21 million Bitcoin is infinitesimally small. And so you're essentially picking a network that's very transparent, has a scarce asset, is very hard to change, and you're juxtaposing that to the incumbent system, which is centrally controlled by people who many would deem to be nefarious and can switch things on a dime. Just go back to the Neil Kashkari 60 Minutes interview during the COVID lockdown. There's infinite cash at the Federal Reserve. Is that the money you want to be holding? The money that is infinite versus the scarce money where there will only ever be 21 million Bitcoin.
Yeah, and that's scary that people like that are in charge of our money today.
It is.
I mean, it's funny, people like, oh, Donald Trump's going to win. And then the market's going to be, everything's going to be peaches and cream. And, for whatever reason, I don't want to like political, but, I had always said, well, when Trump wins, you could have the Fed strike back. You're already hearing it this week. We're not going to lower rates. We were just going to do that when Biden or Kamala was going to be president. They can strike back. They can bite pretty hard, bite back pretty hard in the current regime. And people are sick of that,
I think they're sick of it. I think Jerome Powell, was it last week or the week? I think it was last week. He was at a press conference and a reporter asked him if Donald Trump asked him to step down from the Federal Reserve, whether or not he would do so. And he said no. And I think that was shocking to a lot of people because people hear Federal Reserve and they think if Donald Trump asks Jerome Powell to step down, he has to. The president appoints the chairman or chairwoman of the Federal Reserve. And I think that interview in the press conference will be looked back historically because I think it was a stark reminder not even a reminder, but a stark lesson for many people in the American economy that the Federal Reserve is an independent institution with its own private board of directors who appoint and fire the chairman or chairwoman of the Federal Reserve. The government has no control over that. And Jerome Powell came out last week and explicitly acknowledged that, like, Trump could ask me to step down and he has no authority or power to make me do so. So yeah, and they could play games. I also think they're backed into a corner where they could try to play games, but there is this, even though they're independent, there is this interplay between Fed policy and the vitality of the Federal Reserve's the federal government's balance sheet. Part of the reason they're cutting rates so aggressively now, 75 bips from the highs over the last few years, is because the interest expense on the debt is rising exponentially. And the only way to try to bring that down is to try to use the federal funds rate to make it so those interest rate expenses are coming down. But that's even proving to be ineffective. If you look at the way the long end of the yield curve is reacting to these Fed cuts, it's not acting in the way that people would expect it to move. 10-year yield is going up still. 30-year yield is going up still. And so whether it's the federal government or the Fed, I think they're both backed into a corner. And that's one thing I'm very optimistic for the incoming Trump administration and the policies that they're going to set forth to liberate the economy and make it easier for people to do things, and to try to help particularly people on the lower rungs of the economic ladder to pull themselves up and actually make more money and live a life of dignity. But the Frankenstein that has been created by the Treasury and the Federal Reserve is pretty massive. And despite what Trump and the coalition of people that he's bringing in to his administration may want to do, I think they are going to be confronted with this Frankenstein that may be out of control. So that is another reason why I'm so passionate about Bitcoin and beat the drum about Bitcoin, is because the situation that the country and the global economy at large has been put in due to the mismanagement of the sovereign debt and the financial system, a combination of the Treasury and the combination of the Treasury and the Fed is such that I don't think they can get their way out of it. And obviously, Trump is setting himself up, at least rhetorically, to try to do it. I think high tariffs, zero income tax, and combining that with the Department of Government efficiency, like if he is going to thread this needle and avoid a cataclysmic debt crisis, like he has to get in there and cut spending drastically. And it does seem like he is motivated to do that and is putting people in positions to go out and execute on that plan. But that my caution would be is that I'm very optimistic about Trump and his policies and the team that he's building to go execute on those policies. But I worry that it's too little too late in terms of how far we've fallen and how big the debt crisis is. And
I think it's huge. I'm very excited about Doge, not the coin, but the Department of Governmental Efficiency. I've long said that I knew people involved with government, and they would destroy, these back when they were 50,000, F-150 trucks. Now they're, 80,000. They would destroy them every year to get new ones, because if if they were efficient with those trucks, they wouldn't get a new one. Their budget would be cut. So they kept having to do things that wouldn't be labeled waste, fraud, or abuse. It would be labeled like wear and tear or government contracts. That was a big thing Elon brought up. There wasn't competitive bidding on 20 to 25% of government contracts. I'm excited about that. I hope it makes a difference. So you're an optimist. That's great. So we're going to go to Jason, who has a question. Be sure to retweet this space, everybody. Follow Marty Bent at Marty Bent. Sounds like a superhero from some 50s comic book, like Johnny Dent, Marty Bent. I came from a traditional finance perspective, so Bitcoin made sense, and the other ones didn't. But other people come from it from the other side. Like Ethereum never made sense to me that Vitalik was like the central actor, and I'm not that smart on the tech side. It's just, there's a central actor that we know is actively involved. Like, why would I trust that?
It comes from a misunderstanding. People think that Bitcoin is a tech revolution and not a monetary revolution. And this certainly is a tech revolution in regards to the fact that the combination of distributed consensus via full nodes combined with proof of work mining with the difficulty adjustment combined with a transparent open source software project is certainly a tech innovation. But that tech innovation was all in an effort to enable this monetary revolution with Bitcoin. And that's where most of the signal is. Satoshi said this explicitly in early emails, that the banks and central governments cannot be trusted with control over the monetary system. They've continually been proven to debase fiat currencies throughout history, time and time again. And that's what I think the big misconception is more broadly, is that people see Bitcoin, the tech, and they think it's a tech revolution. And when you think about when Bitcoin was launched in 2009, it was right when social media was coming and Apple App Store launched. And so there was this fervor where tech is where the signal is at. We need technological solutions to all these things. And the misconception goes a step further, where like this tech, the distributed protocol that enables this monetary revolution, I would make the argument that you only need that distributed protocol for very few applications, money being one of them. And I think what everybody has done, many people in crypto have done, is seen this tech innovation and saying, oh, you distributed money, let's go distribute everything else. And I just think that's a complete misunderstanding of what the true signal here is that we have better money enabled by this tech. And that's really all we need to do to go fix things throughout the economy. And so I think we're just in this phase where people are confusing Bitcoin for a tech revolution when it's a monetary revolution, and they're trying to go apply the tech that enabled the monetary revolution to things that don't need it. They're trying to take trust out of every economic and social interaction possible. And I would make the argument that that's not necessarily what people should be striving for. Actually, I do think trust is very important in some economic transactions. Like if you're giving out a loan and you're underwriting a property, you want to know who your counterparty is, who's either giving you the loan or who you're giving the loan to, so that you have the ability to arbitrate contract disputes in meat space. And I think the other misconception is that we need to do all this in the digital world, and we're going to move the physical world to the digital world with these cryptocurrencies. But I think it's actually going to be the opposite. And people think we need to bring financialization to Bitcoin, but really what we're going to see is Bitcoin just becoming more part of our financial system. Going back to what I said in the beginning of the conversation, like I think the big trend of this cycle is Bitcoin as super collateral in traditional structured credit products. And so we're going to see Bitcoin begin to seep into the incumbent financial system. And it's not going to be the structures of the incumbent financial system seeping into the cryptocurrency world. And it's a long-winded way of saying people have really misunderstood what the true innovation here is. It's not a tech revolution, it's a monetary revolution. And they're trying to apply the technical technical mechanics that enable Bitcoin to everything else, which I don't think is what is really going to create long-lasting value in the economy.
No, that's great. Pringle, did you have another question?
I did because, hi, Daz. I've got friends here and we all love Marty. Everyone knows that Marty's the guy to listen to. But my question is, with what's happening with BRICS and all of these other international countries that are sort of moving away from dollar hegemony, how long do you think before it just becomes completely unbearable without having Bitcoin on your balance sheet for all of these other countries, especially Australia? Like, we were listening to the RBA woman, the governor of the RBA, which is equivalent to your Fed, and she is just clueless. And I just think it's up to the plebs. Daz and I know that we have to teach from the bottom up. But what are you seeing in the States? Are you seeing that you guys are actually powering ahead of everyone else, or you think it's an equal playing field at this point?
I mean, from the individual's perspective, it's certainly an equal playing field. Anybody who independently comes to the conclusion they should hold Bitcoin and has the means to do so, it seems to be doing so. So it's level there. Where it's not level is at this nation state political level. I'm shocked if you would have told me this was happening a year and a half, 2 years ago. I would not have believed you. But it seems like there is political will here in the United States to make sure that American citizens lead in terms of building out the industry around Bitcoin and embracing Bitcoin as an asset, incorporating it into our lives. Not only at the federal level, but at the state level. My home state, Commonwealth, actually, Pennsylvania, just presented a bill in their House of Representatives to put 10% of their cash reserves into Bitcoin and have a state level strategic Bitcoin reserve. We've seen laws passed here in Texas, Oklahoma, Kentucky, Tennessee, Wyoming that are favorable towards Bitcoin mining specifically. So like at the nation state level, I don't think it's a level playing field yet. I think some countries get it better than others. Obviously, we talked about Bhutan earlier. They're ahead of the curve. El Salvador, obviously ahead of the curve. And when it comes to the BRICS nations specifically in their attempt to create this BRICS monetary system, I think that's going to devolve rather quickly. They had a meeting a couple weeks ago, and I believe Russia and Pakistan were trying to broker a deal, a literal bartering deal where they were going to exchange wheat for soybeans at a particular trading rate. And I think they're going to quickly recognize that instead of trying to reinvent the wheel and create either a banker like SDR, where they have a basket of goods that backs a currency that they issue, or go straight to a CBDC, I think it's not going to work out in the end for many reasons. I mean, the most important being that those countries can't agree on much of anything as it stands today. They may not like the West, but I think they have their individual differences with each other, and I think it's going to be extremely hard for them to coordinate a new BRICS currency or a basket of goods that backs the currency. And so I think they'll come to the conclusion. I mean, they'll have individual defectors along the way that say, screw this, like Bitcoin, this neutral apolitical protocol makes a lot more sense. Is way we don't have to sit here and debate and discuss contracts and minute details of this BRICS currency we want to launch. This apolitical, open source, distributed monetary system already exists. Why don't we just buy some of that?
It's interesting to see what's happening in South America. We were in El Salvador this year, and then in Peru as well. And there's villages all through parts of Peru and El Salvador that are just using Bitcoin like what you'd use your Apple phone and Apple Pay. So it seems like the bigger countries, and this is just an observation, the bigger countries can't shift as quickly on a dime as what these emerging markets can, and those guys are benefiting from it. And that's what's been amazing in the last few years, watching this happen, where the underdog is really coming out from the bottom and climbing to the top. Like, we're pulling people up. It's not just now the West bullying people. Like, there really is a tool that everyone can use. And that's, I think anyone in this space it's studying the philosophy of it. Like there's also the financial side, like you said, Marty, it's currency and it will be ubiquitous for our children's children's children. And they'll think the internet was created for Bitcoin. But it's great to see that all of these emerging markets finally have a tool to slay the dragon with. And those that have jumped on it are incredible. That's just my 10 sats worth. And love you, Marty. Thanks, Josh.
Love you, Sel. No, I mean, we see this. I see this at TFTC. I mean, and it goes back to the individual level. There's individuals, whether or not your government decides that they're going to embrace Bitcoin. I think it's more important that the individuals within borders of these countries just make the decision first. And I see it. We have some people, some contractors in Colombia and Venezuela that help us with video clips that we make. And I didn't even have to ask them if they wanted to get paid in Bitcoin. They just simply were like, you need to pay me in Bitcoin. It's the most efficient way to get money from where you are to where I am. And I think that's just going to continue to grow as a trend. And governments will come. And that's another signal of this particular election and Trump getting elected. I think particularly Bitcoiners in the West and the United States have woken up to the fact. You mentioned anarcho-capitalism and its roots in Bitcoin earlier, but I think over 16 years, Bitcoiners have realized as the state has attacked our industry that you may not care about political power, but political power cares about you. And if you recognize that, you have to play the game to an extent. And this election cycle, Bitcoiners played the game pretty smartly in terms of supporting politicians that are favorable towards Bitcoin. And I think this will be something that is repeated globally. And so you have, as Bitcoin monetizes, we approach $100,000, $1 million eventually, you'll have individuals spread throughout the world in different countries that come into material amounts of wealth that can then use that wealth to play the political game. And we may not like it. I certainly wish it was not that way. But like I said, political power, you may not care about it, but it cares about you. And if you recognize that, you better try to figure out how to use that political power to make sure that Bitcoin is accepted and is protected by the country that you live in.
You mentioned transferring Bitcoin to your contractor in Venezuela. What are some challenges that need to be overcome by Bitcoin before it can be more widely accepted? I would have thought it would be more widely accepted than it is today, particularly in Africa and the third. I mean, you hear these, tales from Strike that it's revolutionizing, particular areas, but I would have thought it would be more by now.
It's not a Bitcoin problem. It's
no, it's not. No,
it's an understanding problem. I mean, we see it works. Like the contractors that I work with in different parts of the world, I want to get paid in Bitcoin. They send me an address. I send them the Bitcoin. It works. It's worked that way for 16 years almost. It's a question of an individual, like the
learning how to
that
do
you
it.
described gets solved. Yeah, just by not even learning how. Just some people understand that it exists. They just haven't taken the time or put in the effort to actually accept Bitcoin as payment and articulate that to people they're doing economic transactions. But it's like, no, pay me. I mean, Russell Kung, I think, will begin to make this a more popular meme globally, which is pay me in Bitcoin. That Bitcoin has all of it solved. It's all possible today. What needs to be solved is more people saying pay me in Bitcoin. I think that it's nothing to do with
or maybe Starlink or something, being more prevalent.
In Africa, there's a Manchinkura wallet in Africa, which is doing many things. One of which, first product they launched, is the ability to send Bitcoin via SMS. So like you would send money via the M-Pesa system in many African countries. And so in those countries where you have very bad internet connection, low bandwidth, they need solutions like that. So Manchinkura is a good example of solving that bandwidth issue that exists in parts of the world. And on top of that, I believe the second iteration of their products is they're figuring out a way to basically use SIM cards to create private public key pairs. So you can use a SIM card to create a wallet to make sure that those individuals can self-custody. When it comes to like those edge cases that truly demand unique types of tech, there's certainly room to grow there. And I think Starlink could be a massive boon to enabling people to more easily accept Bitcoin. And until Starlink is ubiquitous globally, or something like Starlink is ubiquitous globally, you're going to need these solutions like Mansion Wallet, which enable these individuals in areas with bad internet connection to send via SMS.
The financial revolution to me is always, very easy to explain. Digital gold, censor resistant money, all that stuff we talked about. The technological revolution, for people who are not that techie, explain what makes Bitcoin superior from a technological revolution standpoint.
It's got so Gwern, who's a prolific tech writer, and I don't know if he would consider himself a philosopher, but he's really on top of things when it comes to tech. He wrote a blog about Bitcoin in 2012 that's called "Bitcoin is Worse is Better." I don't think there's any other piece of literature that's been written through the first 16 years of Bitcoin that describes why Bitcoin as a tech revolution works. And again, Bitcoin is worse is better. You look at Bitcoin; it's got 10-minute block times. It's got distributed proof of work that takes an immense amount of energy as more people join the network. You can only fit so many transactions in each block. And you look at it and you're like, it's slow, it's dumb, and it's a bit inefficient. But that is the innovation, is that Satoshi found the correct combination of factors to enable this system to remain distributed and give it the possibility to actually sustain itself in the long run via the combination of these different technical details of the protocol. And so like Bitcoin is dumb, it's slow, and it's relatively simple. And that is actually, people want all this robust smart contracting and this DeFi, and they want this sci-fi protocol that can do everything. But that's not what you want when you're trying to provide the world with distributed money that cannot be corrupted by central planners. It's got to be the combination. Bitcoin is dumb, slow, and very simple for a reason, and so that it can enable it. And that is actually, it's a bit counterintuitive. You say, what is the tech innovation? You're expecting some crazy sci-fi breakthrough, but it's actually almost taking a step back and saying, what is the most simple form of software that we could release that would work, not only work, but scale so that it can remain sufficiently distributed so that it cannot be corrupted. And so that is the tech innovation, is that Satoshi figured out a combination of different technical aspects that create this dumb, simple, slow system that anybody could use.
What makes you most excited about Bitcoin's future? And then I want to tease your brain for some Bitcoin and finance things as we conclude.
Saylor says it perfectly. Bitcoin is hope. Again, like I said, my origin story of finding Bitcoin and being receptive to it was being a child of the great financial crisis. And not only am I a child of great financial crisis, child of 9/11, the Patriot Act, great financial crisis, COVID lockdowns. And throughout my life, at least, I'm 33 years old now, I've been beat in the head with the overbearing nanny state and injecting itself into my life time and time again throughout the decades. And Bitcoin provides me, at least, why am I optimistic? What excites me the most is like hope that we can get the central planners and the nanny state out of the most important tool that we leverage as humans, which is money. And once you do that, you can really begin to, you're really playing with fire. You can begin to fix a lot of the systemic issues that exist in the world. We have it in a light out here outside the studio, fix the money, fix the world. I truly believe that. And that is what excites me the most, is that we are truly on the path to fix the money, and then can begin using the better money to get the nanny state out of our lives and solve very big problems by ourselves. And that's what makes me most excited.
Some of my ideas for products around Bitcoinization, particularly in financial services, make me really excited. But in some ways, they can't, in our current regulatory regime, it can't be done. particularly two that I'm thinking of, but I'm not going to share my idea because we'll do it offline. We could build a Bitcoin company or two. The credit is a good idea. Actually, Bitcoin Tina gave me a good idea when he was driving around. He had this idea to always hodl and to get lines of credit against your Bitcoin so that you could be liquid. But then we were looking around. This was years ago when we talked about it. They were all clunky solutions. That's what I find with some of these things. They're just very clunky. Are you seeing any cool solutions that you're allowed to share? I know maybe you can't with your company, but
I don't want to say it has to be clunky, but if you want certainty that your Bitcoin's not going to be rehypothecated for this particular use case that you're describing, like you want particular assurances. And I think Unchained has really proven this model and done it extremely well for almost 7 years. So if you want, I have done this before, if you want to get some liquidity from your Bitcoin, but you don't want to sell it, you put it up as collateral for US dollar loan. And the way Unchained does it is they have a 2 or 3 multi-sig wallet. And before you get your US dollar loan, you load up your your collateral, your Bitcoin into that multi-sig wallet. And that the interaction there is in that multi-sig, I have a key, Unchained has a key, and then another third party banking partner has a key in the quorum. So there's 3 keys, 2 or 3 are needed to sign to move the Bitcoin. Obviously, before I pay back my loan, Unchained is not going to sign a transaction to give the Bitcoin back to me. So I can't unilaterally move it. Unchained can't unilaterally move it, and neither can the other key holder in the multi-sig. But because I have a key in that quorum, I can see into the wallet, and I know that Unchained and the other third party have not moved my Bitcoin and given it to 3 Hours Capital or FTX so that they can trade it to get a yield back. And that, like, the long-winded way of saying, like, I think I wouldn't describe it as clunky, but I think you need certain best practices involved in these credit products, particularly to assure yourself that your Bitcoin's not going to be wasted. And the lack of clunkiness that existed with companies like BlockFi, Celsius, and FTX is ultimately what led to their demise and the loss of their clients' Bitcoin, is that they essentially had black boxes that afforded their end customers no assurances into what was happening with their Bitcoin, and they went and gambled with that Bitcoin. And so I think Unchained's a great example. Debify out of Latvia, they came out of HODL. HODL has similar multi-sig escrow products that allow you to get loans for your Bitcoin. Debify is really taking that to the institutional level, and they're building a suite of developer tools that banks and institutions can easily adopt to port this Unchained and HODL model to what they're doing. So I think it's getting mature there. What was really important, particularly for these credit products, is ensuring that the collateral is safe and not being gambled away. And I do think the UX around that is getting better. And it has to be this way. And that's another thing. Like, we as humans and as individuals are going to have to get used to a new way of interacting with these products, because Bitcoin is a digital bearer instrument that demands that if you want particular assurances, you have to use it in a certain way.
Yeah, so there will be an inherent clunkiness no matter what.
It's like, it's just it won't seem clunky. Like in a decade from now, it won't seem clunky. It'll just be the way you do things. It's like when running water and plumbing systems first came to humans, like they literally need to learn how to wipe their ass and flush a toilet, and that was foreign to them and clunky to them at the time. We're going through a similar process now. That's the other thing. Like, I think Unchained's lending desk is the most mispriced credit product in the world. I think their latest rates are like 14%. But if you understand how the collateral is handled and how margins liquidated if it needs to be, like, it is the safest, as close to risk-free credit product that exists. in the world. They've issued, I believe, at this point, over $1 billion in loans and never had one loan loss on their books, which is unheard of in the world of lending. And so that's another thing I think will happen this cycle, is that credit funds, particularly private credit funds that are looking for better, safer products, instead of going out on the yield curve and investing in some corporate bond or some convertible note for a housing project in some obscure part of the country, they will opt to put their dollars behind a lending desk like the one that Unchained operates, where you understand the risk, and you can understand the risk very easily and come to understand that the risks are extremely limited compared to the other options that exist in the world of private credit.
Talk about advice for tips for newcomers in Bitcoin. What tips for the newcomer in Bitcoin?
Stay humble, stack sats is the first. Don't get into leverage. Don't worry. The price is going up. You may think you missed the boat. The boat is still at the dock, whether you believe it or not. Learn as much as you can. Read as much as you can. Listen to as many podcasts as you can. Practice too. Download a mobile wallet. Send a little bit of Bitcoin from the exchange that you use to the mobile wallet. Understand how private public key works, private public key pairs work, and how to use Bitcoin. And just experiment and ask questions too. There's plenty of people within the world of Bitcoin that are more than happy to answer questions. Don't be shy. I mean, I would not be where I am today if I didn't abuse the liberty of direct messages on Twitter to annoy people to either talk to me or explain something to me.
And global adoption. We talked a lot about global adoption. Any other things we missed?
If we are heading into the nation state, it's a bit counterintuitive. I think it's weird. Humans are very weird social beings. I think global adoption will significantly increase in the years to come, because for the longest time, one of the easiest tropes to trot out against Bitcoin is like the government's going to ban it. And you had many people in traditional finance and many skeptics just run with that. Like, I'm not getting into Bitcoin. The government's going to ban it one day. Well, now we're at the point where the government's actually saying, like, not only are we going to ban it, but we are going to acquire as many Bitcoin as we possibly can. And in terms of global adoption, I think that's going to send a signal to everybody. Well, it's obvious the government's not going to ban it. And if they're getting it, maybe we should too.
No, it's a lot of fun. Marty Bent, Truth for the Commoner. Make sure you go to Apple, Spotify, download TFTC, Truth for the Commoner, on Apple, Spotify, wherever you get your podcasts. Also, download my podcast. We will re-air this show, edited and cleaned up for those of you who missed the intro, at the Financial Quarterback Podcast. So be sure to retweet the space, follow us, like, and subscribe. Thank you so much, Marty. A lot of fun.
Josh, thank you. This was great.